Hello, everybody. Welcome. We're going to go ahead and do yet another earnings per share question because this is the best way to go through and learn earnings per share. So my disclaimer and copyright notice, the information and opinions in this presentation are those of myself and not my employer or any affiliated organizations, including but not limited to Irvine Valley College of the South Orange County Community College District. This presentation does not constitute any legal advice whatsoever. This presentation is copyright 2008 to 2026 by Bennett Tchaikovsky. All rights reserved. Any distribution is strictly prohibited. Throughout the presentation, I'll make reference to publicly available information that is the copyright of other parties. I do not claim any right to the copyright that author references to those other parties. So there you go. Okay, so we're now going to kind of look at what's the effect of, preferred stock, and just a few things to kind of remind ourselves when we're doing this is that we do subtract preferred dividends. Now, what's critical is if they're cumulative, meaning that they're obligated to pay them, we deduct them even if they weren't actually declared or paid. The other thing I also want you to kind of remember is when it comes to stock, when it comes to a stock dividend, we're going to basically retroactively adjust the beginning of the year, even if, as long as the financial statements have not yet been issued, still retroactively adjust them. So let's go ahead to this question. So January 1st, 2027, Hello Atlas, his company had outstanding shares that include the following: 280,000 shares of $50 par value, 7% cumulative preferred stock, 900,000 shares of 0.001 or 0.1 cent par value common stock. Then we have net income for the year was $2,530,000. No cash dividends were declared or paid. On February 15th, 2028, all preferred dividends and arrears were paid together with a 5% stock dividend on common shares. So this is the key, because this happened here, at least for the stock dividend, and the financial statements were issued in March 2028, we are going to go ahead and basically adjust it for that stock dividend. So at least the common shares. So on April 1st, 450,000 shares of common stock were sold for $10 per share. And then lastly, we have October 1st, 2027. We've got 110,000 shares of common stock were purchased for 20 and held as Treasury stock. Okay. So let's go ahead and do the first thing we want to kind of go through and say is, okay, we've got common stock. So my common stock, my beginning balance here on 1/1/27 was 900,000 shares. Okay, and we're not going to worry about adjusting for the stock dividend just yet, but this was going to be outstanding for the full year. So that deals with this first one right here. Then we kind of go through and say, okay, there were no dividends. Okay, now on April 1st, I issued 450,000 shares. Now with this was on April 1st. So this during 2027, it's going to be outstanding from April 1st to December 31st, or April, May, June, July, August, September, October, November, December. So 9 months. So this is going to be 9/12, or 337,500. Now over here, we repurchased on 10/1/27, 110,000 shares. Okay, so when we buy back shares, remember that goes through and impacts our, basically that's going to go through and impact our shares outstanding. So right over here, but this is only going to be outstanding for this repurchase occurred on October 1st. So this is only going to basically be for 3/12, or October, November, December. So on a weighted average basis, this is only going to be 27.5. So on a weighted average basis, my common shares are going to be 1,210,000. Okay, now let's go to the earnings per share. Earnings per share is going to be my net income minus my preferred dividends. And this is going to be divided by my weighted average shares outstanding. Okay, my net income was 2,530,000. But when it comes to this preferred shares, because they are cumulative, I'm going to have to go through and deduct it even if I didn't pay it. So here, this is 280,000 at $50 par value at 7%. So basically, this is going to have a value here of $14 million. And then I'm basically making this over here at 7%. Now notice, really importantly, it's not saying it's convertible preferred stock. If it was, that would lead to something else. We would have to basically go through and make another determination. Okay, so our net income minus preferred dividends is 1,550,000. But I have a problem here, right? So over here, we had a stock dividend. Okay, so even though the stock dividend occurred on February 15th, 2028, it basically took place prior to the financial statements being issued. So when it comes to my weighted average shares outstanding, this is going to be 1,270,500 to basically make effect for that split. So here, 1.27 million, 1,270,500. And so my earnings per share is going to be $1.22. Now it's probably going to be up. It's actually $1.22. Shocking. And let me just do one thing real quick, so I'm not misleading you. Okay, so that's how we go through and do this one over here for Atlas Corporation. In any event, I look forward to seeing you on the next video. Have a great day. Please remember to like and subscribe. If you have not already, if you want to leave a comment, if there's other questions you want to answer, if you have any questions, please feel free to email me at ibc30tocpa@gmail.com. Have a great rest of your day.